Hello and welcome back to Game of Trades, your #1 channel for videos on the stock market and cryptocurrencies. This video is going to be focused on the S&P 500. We've had a wild past couple of days on the stock market here. We had this recent correction in price, and within a couple of red days here, we wiped out probably the last 35 days worth of gains that we had on the S&P 500. So that really shows you the importance of finding objective long opportunities and not fall into the trap of buying at the top of large moves here. We had a nice little setup here with price going up, grinding up towards this line of resistance, this price channel resistance, the momentum on the RSI that was fading as price was grinding up. And so that increases the odds of a correction. So that's what we got here. We got a nice breakdown of this price channel support here. We tagged this horizontal level of support corresponding to this top right there. And so far we've had a nice green candle off that level. So in this video, we're going to discuss exactly what's going to be happening next, what kind of opportunities you should be looking for in this market. Now, we try to stay as objective as possible in our analysis, and we've made quite a few accurate calls over the past few months, but we are not immune to mistakes. So I strongly recommend that you make your own research before trading, before investing, before taking any positions in the markets. But if you're here to learn how to navigate these crazy markets successfully, learn technical analysis, learn macro analysis, make sure to smash that subscribe button. Now, without further ado, let's get right into it. All right, so a quick recap of what was said in the last video, and I am referring to this video right here. We talked about two main points. First of all, the big bullish structure that we currently have in the markets, right? Huge bull market breakout. All of this still applies to the current price action. We've got massively bullish technical developments across the board. So if you're trying to trade this market, you have to be looking for long opportunities. This is a bullish technical structure, and we have no sign of the market breaking down just yet, right? This is not the type of development you get every day. You don't tend to see this type of big bull market breakout like we've had over the past few months. These are really huge developments and does increase the chance of seeing a larger bubble type of move up. We've been talking about that for quite a while. I consider these developments here to be the very beginning of a much more aggressive move up in the markets. Now, the second thing we talked about was obviously this overextension here, this weak momentum, the weak market breadth as we were approaching resistance, and the high probability of a short-term correction. That's what we got. And yesterday on gameoftrades.net, for the members on our website, we posted this article talking about the breakdown in stocks, and we made this nice little update where we identified two potential zones of support for this correction. So that was right as the markets were correcting here. We talked about these two big zones of support that could be used as buy the dip opportunities. As a trader, you need to understand you won't be able to predict the markets, but what you can do is identify opportunities with a high potential reward to the upside and low potential risk. And you do that by entering at strong support levels. So this zone right here was a strong support level. This zone was a strong support level. You can put a stop loss just under that level, and you know that if the markets continue down after you entered and break through that support, then that's a big breakdown in the bullish technical structure, and you do not want to be long anymore, hence why you have a stop loss just under that level. So of course, since this article was posted, we saw a big move up here. Now, the one thing I don't like about this move here is that we didn't tag this line of support, this trend line support here. Now, not everything is always going to play out exactly as you expect, but ideally, in an ideal technical world, I would have liked to see a tag of that support before having strong convictions of a larger move up. We're definitely a lot more bullish right now than we were right here, but could we have another rejection off that price channel an undercut of this low here, put in some nice divergence as we test that level of support before a much larger move up. This is a potential scenario. This is just such strong price action here, just historical developments happening right now. Massive overextension of the markets, massive bullish sentiment. But right now I want to focus on the short-term structure, mainly for traders, right? For investors, this market is showing some big warning signs right now. US stocks are getting expensive right now. If you're a long-term investor, there are some much better opportunities out there than this market right here that's making these unprecedented moves. I mean, this rally is unlike anything we've ever seen, and yet investors are really not seeing this rationally. I remember back here as we were trading this move up, this was already such a massive move up in the stock market of this low in 2018. The rally we've seen since the March 2020 low dwarfs this one massively, right? So, we're just not in the same type of market anymore. But again, getting back to that short-term outlook, one of our biggest concerns over the past few weeks, what we were talking about as the markets were making this melt up move here, was the stock market breadth, right? So we were looking at this indicator here, S&P 500 stocks above their 50-day moving average. And so this gives you the number of stocks that are trending up, right, on the S&P 500. So when you get a high reading, all the stocks are trending up. When you get a low reading, all the stocks are trending down. Now there's two ways to use this indicator. You can either use it as a oversold or overbought reading indicator. You buy the dip when all the stocks are trending down, and you take profits when all the stocks are trending up. But that's not my favorite way to use this indicator. The other way to use it is what we talked about over the past few weeks, is by identifying divergence between the breadth and the stock market. So here recently we had the stock market breadth come down massively here. So we had extremely low breadth, but the market was at all-time highs. Very similar to what was happening here. Very low breadth here, market at all-time highs. That's telling you this is a weak rally, and we're likely to get a correction from that point on. Exactly what happened here, exactly what happened here. So this is no longer a concern. Now I know it may seem like nothing much has changed here, but the one most important thing that's changed is that the market is no longer at all-time highs. So this is no longer really divergence. We could have a pump up of the market breadth with a pump up of the stock market at the same time, which was not the case right here as the market was already at all-time highs. So we're going to take a look at a few different sectors to see if that type of move in the market breadth would be possible, right? To see a broad rally across multiple sectors. To answer that question, we actually have to take a look at these sectors. So that's exactly what I'm going to do right now. Now, before I continue, make sure to smash that like button as hard as you can. There's a lot of effort and research that goes into making these videos. So if you're enjoying them, if you're learning something new, don't hesitate to let us know. And if you have any comments, any feedback, make sure to leave them down below in the comment section. I do go through and read all the comments and try to take them into account for future videos. So getting back to the video, this is the industrial sector. So we're going to take a look at a few different sectors, including this one here. This is one of the sectors that was lagging, right? So we had the industrials make lower highs here as the markets were making all-time highs. This was one of the sectors that was bringing down the stock market breadth and making the rally look unhealthy. So if I add the RSI on this chart, you'll notice one very important technical development here. This is just one of my favorite types of setups: a low, a lower low, and a higher low on the RSI, right? So this is very bullish, especially when you're in the context of a larger uptrend. You don't tend to have bullish divergence very often during an uptrend, and when you do have that type of divergence, it can trigger a large rally, right? So if you're looking for further confirmation, we've got this downtrend line here. You can wait for a breakout, retest, resumption if we see that type of move, you're going to see the market breadth increase. Now again, we're still under resistance here, so could we get maybe another move down before making a full bottom and then resuming the uptrend? Again, that's possible. I'm not here to predict the markets perfectly. I'm here to give you my opinion on what opportunities you should be looking for and what the charts are saying right now. And right now the industrial sector is looking good. Now we can also take a look at XLF, right? So this is the financial sector that has been lagging here. We've had yields come down, so that's bad for the financial sector. We've had financials lag the rest of the market, also bringing down the stock market breadth. But look at what's happening here. Same setup as the industrial sector. You've got a low and then a lower low here. That's starting to look good for the financial sector. Now that we've taken a look at a few different sectors, I want to take a look at yields as well, more particularly the 30-year Treasury bond yield, because I'm starting to see a lot of comments, a lot of Twitter posts that are talking about yields heading down to zero, heading into negative territory. Now, while we do not expect a longer term uptrend in interest rates, it does seem like we might get a temporary bottom in yields at the current levels here. And I'm going to tell you exactly why this is very, very important to watch. I think a lot of people are getting into TLT right now, which may not be the best setup at current levels. Now, zooming into the 4-hour chart, we can take a look at this in detail. And here you'll notice the 30-year yield has been oversold here for quite a while, and with overextended readings building some divergence. So I think we're starting to get overextended here. We're doing so as we're hitting this big level of support right there. Huge support on the 30-year bond yield. So we might get a temporary bottom in yields right now and get a counter trend rally in bond yields. I think that's a high probability scenario. Now, whether we get that straight away or we, undercut or hover around or maybe even test this level of support before snapping back above, that's possible. And why is that important? Because if yields are bottoming, then that means TLT is making a temporary top here. And you can see this nice bearish engulfing candle here. That's a big development on TLT, right? This is something that we've talked about many times before. If you're trading the stock market, you have to look at what's happening on the bond market as well. When bonds go up, stocks go down. They have a very, very close inverse relationship short term. And when you have a correction in bonds, that tends to trigger a rally in stocks. You have to watch this trend line support here, but if that's broken, we might start a small correction in TLT, which might trigger some upside in equities. Our outlook can still change. We're flexible, but that's what the charts are saying right now. I hope you guys enjoyed this video. If you did, make sure to smash that like button as hard as you can. Now, in the meantime, good luck on your trading and see you next time.